Hello traders, welcome to the TMT Daily Strategy video for Thursday, November 1st. Wow. First day of the new month, guys. Mutual fund inflows did it again. Well, we had some inflows come in, picking some stocks that were beaten up. Today we did really well. We gapped up, and I want to show this to you. There's a 5-minute chart of the spiders. I really would like you to write this down and reference this gap. As you know, I'm a big advocate of gaps. Gaps will eventually get filled. Today was very interesting, right? We opened up, we pulled back, and usually there are some times when we just gap up and run, which is a gap and run play. We did manage to gap up, we sold off, and we had that lower high here. That kind of told me we were going to go lower one more time, but we held the opening range, right? And this is what we teach you here at TMT, and then we started ascent higher, right? But then at the end of the day, which was really interesting, I'll tell you, always look at market on close orders, right? We had 200 to buy, 200 million to buy, and they reversed 450 million for sale. And when they saw that, the algorithms kicked in and sell programs came in and really hit it hard. And this is a hard sell-off, guys. There's no question about it. I don't like this. This is what really concerns me. And I've mentioned that we're going to probably rally. I'm looking for a 6 to 8% corrective rally, but not all in one shot. Not all in a straight line. It's not going to happen. There are eager sellers trying to get out of their positions. A lot of institutions trying to lock in some gains before the end of the year. And then you're going to have the fund managers, the global fund managers, as we all know, we talked about, that are heavily in cash that are going to be chasing performance before the end of the year. So you're going to get that two-way volatility. And what I do think is going to happen, technically, right, my technical view, things do change. But if we break down yesterday's low, and let me get a cursor here, crosshair. All right, this is the number right here, that in green, 270.12. Watch that level. If we break it and back test it sort of like a bear flag and we fail again, it's going to be a great little short to fade all the way down to fill that gap. Now, we could go even lower, obviously, but if we fill that gap and we hold, that's going to be an awesome buy signal too as well. We just don't know where it's going to go. Is it going to go here, or is it going to go all the way down to the opening range from Wednesday? Tuesday, or even down to the lower end of the range? Yes, it could go as low as that. Volatility is quick, and stocks are moving, jumping 5-6 cents at a clip, and futures are at least half a point to a full point in a matter of minutes. So now the volatility is back. This is what we want, but we got to control that volatility, right? So if you're not used to it, drop it down to your contract size that you can manage, your share size that you can manage, and trade accordingly. Because what happens is that when volatility picks up, what's going to happen? Your stops are going to get greater, right? You can't go with stops that, let's just say December of 2017, January 2018, when the stock just went straight up. You can't do that anymore because now you have two-way volatility. You're just going to get stopped out more. You have to widen your stops and reduce your share size and contract size in order to be in the game, okay? And at least in order to be in the game, that the same account size you're playing. Now, if you had an influx of cash and you just threw another 300 grand, 400 grand in, many people can't do that, then obviously stay the course. But that's what we're looking at now. So I wanted to show you and want to point out the areas here. Very important. So before I go on, many of you commented on the Technical Tuesday with Olivia Vosnenko at Modern Wall Street. Great skit. And I'm glad you guys liked it. You put a couple of comments, and you actually, a few of you guys gave me a call saying it was really pretty cool. Eventually, we're going to be doing a show at one point. We're putting it together now, but really informative stuff, you know. And we always get comments, and we ask for requests, so it's pretty cool. It's all good stuff. I'm glad you guys enjoyed it. So every Tuesday, I'll send it out to you via email as well. So look out for that. All right, so let's get right into it. All right, so we did get a buy signal now for the market, right? Because why? We broke that low, right? We broke that low, but look what happened. We came right back to that low, right? So it's a tough situation. I don't know if I want to be really short VIX right now, and I would love to be short VIX when it was something like this, you know. Where are we here? Back from here. You know, 3 big hard days up, I would love to be short VIX all day long. But when you get something like this, you know, up to boom, 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 and then just a gradual climb up, that's not enough for me to get short. Remember, being short volatility is a big no-no, especially when volatility is picking up. And even if the market's going up, volatility is picking up because why? Managers are starting to hedge their bets, and they're going to continue to buy. So I would not be short any of these instruments at all. I'd be a better buyer down here. Okay, just giving you a little thought here. All right, so ES. Never changes. You can see this is exactly where we gapped up to, right here, beautifully, right up. We gapped right up above that wick from the previous day, and we held. Now, I don't like this wick here. If you could see, this wick right here, okay, right here, is exactly where this instrument, right, this future traveled, where buyers brought all the way up, and look where it stopped to, the 38% retracement, right to the penny. Never touch this, guys, and as you know, I leave this for future reference for the next day's analysis. Went right to the 38% retracement, and I mentioned 38.50 or 61.8% retracement. Usually, I like to see it go a little bit higher than 38%, but that's not a good sign. If sellers come in the after hours in Asia and Europe, look to the gap fill, and even lower. I do think that the two-way volatility is here. I think that we were going to get a little higher, at least test the 200. Now, it could happen still. It's Tuesday night, early evening, so a lot could happen between them, but I'm just giving you a couple of scenarios. We could take that all back again and go higher. If we close above Tuesday's high, then we should test the 50% retracement, which is the 200-day moving average. If, in fact, we break the low, we are going to head for the gap fill like I pointed out in the spiders, okay? And the same thing here. We should hit that 2680, 85 area. Then we should go back up again, okay? And then we should test that 2800 and even back up in here where that high was. And then I think, to be quite honest, I think the market is tired, and I think the market had enough. I'll be honest with you. I think that'll double top this little area, and then off to the races we go to the downside. Remember, things do change. We'll see when we get up there. But these are the three areas I'm still looking for, hawking for sell signals when we get up there. And I do believe we're going to get that corrective rally, but it's going to be tough. The rally's going to go up, get everybody long, then the market's going to sell off, get the long stopped out, shorts are going to leg on, and then the long's going to get up and stop the shorts out. So it's going to be a big, big fight, but ultimately we're going to get up there in a real choppy fashion. Here's the YM. You can see, guys, right there. Now, we did make the 38% retracement, but the YM's been rolling over. The 200 days been rolling over, so there's really nothing to drag about, write home about. But we did look at a wick right back down again. I thought we were going to close above this uptrend channel, the low Ren, and we closed just below it by a hair. And now I think we're going to get the gap fill in the next couple of days. Now, we have non-farm payroll numbers that come out. It's going to be very important, as you know, on Friday. The job numbers. We'll see what happens. We do have still positive divergence in RSI, MACD, and we can see the histogram starting to go up here. That's positive. We haven't gotten the buy signal yet, but we got a couple of days going to be interesting to watch, that's for sure, going into tomorrow and Friday. Transports, right up again. Look at that, even the 38% retracement, right? So we had 38% retracement hit in the NQ and YM and the ES, right? And look what happened. We're not even there. This is our leader. Our leader is not leading. It's actually breaking down. But it does play catch-up. Okay? Not a good sign here. So now it didn't even gap up. It just literally opened where it closed the previous day, ran up, and then sold back off again. So it's going to be a tough one, guys. I'll be honest with you. If we can get back up in here, get back up into where we want to short this thing, I tell you, it's going to be a phenomenal short at one point. But I do think global fund managers, you got a lot of positive things running. You got, after the election, the midterm elections are over, markets generally rally. Go look at your Trader's Almanac. Seasonality tendencies will say that after the midterm elections, we usually rally. We do have seasonality strength going into the Santa Claus rally, November, December, right? We do have an overbought state, right, being crushed all of October. So it's going to, there's a lot long playing it. It's just, now it's iffy. And then you have global fund managers, really a lot in cash, chasing performance. It's going to happen. We just don't want to, if you want to get long, you don't want to get long prematurely, okay? Spiders, big long-legged doji, okay? Indecisive candle. We rolled all the way down. We rolled all the way up. This would have been a nice gain to build off of, but it's not anymore. Now it's an indecision candle because the bulls and bears lost. They both ended up even, flat. This is not a good sign for tomorrow, guys, okay? We need to either take out the high, or and then move higher, or we take out the low and we're going back to the lows again. All right, so just keep an eye on that. That 200 day is going to really come into play here, as you can see, the 276.41. Okay, next is going to be the NQ. Same thing with the NQ. Facebook did really, really well. So we're going to see. Let's see if we can continue the move higher. And you know, it's going to be a tough call the next couple of days. That's for sure. Gap fill is going to happen. It's only a matter of when. It could be tonight or going the overnight. We could get a gap fill in the overnight pre-market session and then move higher, which is great. Okay, positive divergence still intact. So right here, 38% retracement. NQ was hit as well. So we hit all of the indices at 38% retracement and failed at the 38% Fibonacci retracement, except the transports didn't even get there. All right, 200 days is going to be the next big caveat. 71.2732 in the NQ. Okay, IWM. Now the Russell is just it didn't even break out. It broke out of the sideways channel like I just put out yesterday. Just gapped, not even gapped. It opened above it and barely even. This is in trouble. This is a secondary leader. I do not like to see this. I think this is a precursor of what's to come, guys. Even if we get back to the 21 EMA, that comes at the 38% retracement. This is just not looking good at all. And transports are not helping either. 38%, 21-day confluence of resistance. That's going to come in right here at the 158.60. Okay, next is going to be crude oil. And I mentioned yesterday's video, looks like a big flag to me. I think we see lower prices. Kaboom. Right down, broke right out of it and sold off. Next spot, guys, is going to be right here, 63.87. Let's just put a little reference point right here. 60. Let's call it 63.50 right there. Okay, that's going to be your first area, swing low right here. Then your next swing area is going to be here at 62. Then down here at 59.88. Let's get to these areas first before we go in. You can see we're getting into an oversold state, but this is. We talked about this. It's such a shame that we didn't get. I mean, I didn't get it. I know some of you did catch it. You said the heck with it. I'm just going to go and short it at 77, at 76.5. I think some of you got, but that's great. I don't know if you're still holding it now. We do have a gap here, got to get filled. The gap here's got to get filled. So there are some upside gaps that are going to get filled. But let's let this market come in. I like to see high 50s, and then we start building a long position in crude oil. Next is going to be GDX. And guys, I think GDX and gold are going to hit starting back at the lows again. It was a great trade. We caught that 1242. The algorithm put right up in here at 1242. This was back here, and then we sold off. And now the new area is 1235.90. The algorithm, and we're going to go lower. I think we're going to hit this 1180, and I think we'll flush down to 1140 right here, 1150. That's when we'll start looking for another long trade in gold. But gold is just not even getting out of its own way anymore. And the producers are starting to leg into a short position. So that's going to tell you that the smart money is looking for lower prices in gold. ES 10-minute. All right, we had this break here. As you can see, we broke out. Beautiful, beautiful upswing right onto the TMT proprietary price channel. Broke right down at the end of the day and caught these areas here. This is very valid, okay? Keep this in mind. Right here, these clusters, write them down on your trading charts. These are really important for dip buys tomorrow. But you got to keep them tight, because if they roll them over, they should flush them all the way back down again, guys. So just be careful. This is the ES intraday. Next is going to be the YM. Pretty much the same, right? We broke out. We tagged a lot of these resistance areas that we mentioned yesterday on our research video. So these are big areas of support here, okay? 24.809 to 24.924. Very little support up in here. Coming in at the 25,000, just round out lots of round lot number, okay? Resistance is right up here, just write them down, pause the video, write them in your trading charts. And last is going to be the NQ, pretty much the same. Here's your area, good area of support coming in at the 6809, 6800 to 6850, and then above that you're going to have small support at 6895 and 7000. Resistance starts at 7058. 70.27, these are the R1, R2, and then a big cluster up here coming into 71.27 to 72.15. Anywhere in this area here, if we get a hard run up, I'd have no problem looking for a short trade. Okay, guys, let's see what happens. We're coming into Thursday. Remember, Friday's big day, non-farm payroll numbers. Let's see how the markets react. Remember, it's not the number, it's the reaction to the number. Have a great night.